FOMC days are definitely the most fun day to trade. It's gambling because you never know what's going to happen, but the volatility and the ranges just create the most awesome opportunities for day traders if you get on the right side of the trade. However, if you get on the wrong side of the trade, you can lose a lot of money very quickly. So FOMC days are not for the unexperienced and not for the faint of heart. Stick around till the end of the video because I'm going to walk you through how I approach FOMC days using this week's as an example. So if you don't know what FOMC stands for, it stands for the Federal Open Markets Committee. It is basically a group of people from the Federal Reserve who get together 8 times a year to discuss what's happening with the economy and make decisions about how they're going to handle things moving forward. Now, this is a very big deal. For the entire world's economy, everyone is affected by the decisions that the American Federal Reserve makes. So everyone is watching whenever one of these meetings happens. So at 2 p.m. on a Wednesday, they will release the notes from the meeting. That is essentially the minutes of the conversation that they had. What do they talk about? What decisions did they come to? And the whole world is watching. Because of that, you get insane amounts of volatility on this particular day. But it's gambling. It's straight up gambling. There's no way to know what's going to come out in those minutes, and there's no way to know how the market is going to react to that. Anything can happen during an FOMC meeting. If you want to trade it, you have to be light on your feet. You have to be like water, my friend. You got to be willing to change your mind very quickly, and above and beyond all else, you have to be able to manage risk. So when I approach trading the FOMC, I do it very cautiously. I'm going to walk you through how I made my decisions this week, showing you some examples from the Brigade live streams. Let's start with the day before the FOMC when I was saying this. One thing I wanted to make note of was that it is very common when we have an FOMC meeting, when the meeting happens, the market is sitting right at a balance area high or a balance area low. Well, I'll give you 2 guesses as to where we close at the end of the day. What did I talk about this morning? They love to be at a balance area high or a balance area low. For the FOMC meeting, I assumed we were heading down towards the balance area low, but it looks like I was wrong. And instead, they're heading up towards the balance area high, which is somewhere around 45 in this area up here. And of course, we closed at the end of the day right at the high. Well, wouldn't you know, market closing right at the balance area high. So we are set up now to just chop and grind tomorrow morning right here on this balance area high. The next day, I jumped on the Pirate Traders Brigade live stream to talk about this. And in the overnight, it just went nowhere. Grinding right on that balance area high, which is, of course, as to be expected, because we know that this is the FOMC meeting. We know that traders often don't want to get themselves overly long or overly short before the announcement. So likely the market will go sideways, something like it did in the overnight here. Rotate and rotate and rotate and rotate until 2 p.m. Sit back, relax, and enjoy the chop, my friends. And sideways it went all morning long. Just up and down and up and down and up and down and up and down and up and down. And then finally it was 2 o'clock and we were ready for those FOMC minutes to drop. As soon as those notes drops, those news bots will go nuts with the market. We will likely get a lot of volatility, big moves, one direction or another. I would encourage everyone to ignore any initial move that the market makes. It almost always makes a move one direction or the other and then reverses. As always, I do not recommend trading during the FOMC, but if you're going to gamble, if it's what you're going to do, the way you want to do it is wait until the momentum is confirmed. So the market does some chopping, it does some grinding around, probably in a very large range, and then it starts to just pick a direction and head in that direction. Once we get that, so here's the beginning of this volatility. Once the market picks the direction, you can take trades in that direction, but you want to immediately move your stop above your entry just as soon as you're in profits, as this market could reverse at any moment. Would you look at that? Look at the market go. So, of course, the market went straight up, turned right back around, and came straight back down, as was expected. Okay, pausing it here real quick. So this was just before Powell started to speak. We had just printed the K period, and we left behind a set of single prints from the J period. Now that told me that we had a pretty good probability just because the market was so volatile, obviously, we had a pretty good chance of coming back to backfill those single prints, which would get us back inside the range from the morning. And that had me thinking, if the market wants to find support, it should do it somewhere in that range. I then looked over and saw we had this giant node of liquidity here at about 52.44. And I said to myself, if the market backfills those singles, and then this liquidity becomes support, meaning the market comes down and it fills that liquidity and it doesn't tank lower, that would be bullish to see. Now, if the market comes down and it just blows right through that liquidity and it's no resistance, that would be a sign I should be looking for shorts for continuation lower. The market then backfilled those single prints, worked its way down into that liquidity, filled, but did not continue lower. So at this point, I'm saying to myself, either this thing's going to keep going to the downside, or it's going to turn around and head back up. If it turns around and it starts heading back up, that is a location to look to get long. That is the market making a decision about which direction it wants to try to go. And so I should be considering getting long if they can reverse it here. If they can flip the order book and start to bring in some support, that would be bullish to see. And then the market did exactly that. It took me a few minutes to get myself situated, and then I jumped on the mic to let everyone know. And we're off. All right, so are they going to start some momentum up, or are we coming back down into the range?
The risks to...
Okay, so far they came down. They took out all that liquidity that was sitting inside the range there. Okay, and now they've begun to create some momentum up as he begins to answer questions. So if the market's going to pick a direction and move, it should do it in the next few minutes here. If we come back down to 42, then it'll likely go nowhere for a little bit. So let's see what happens. So they're heading up to the highs here to squeeze anyone that's been selling. That could lead to new buying. So the next thing that I'm watching is this liquidity at 52.75. As the market pushes up to it, does it disappear or does it fill? If it disappears, we could just fly right through. But the momentum to the upside has been chosen. It has been confirmed. They took out the stops up there they needed to take out. So now the question is, do they bring in new buyers up here at the highs? First potential location for that, we're testing right now around 66. But I do suspect they're going to try to bring in some new buyers. Okay, we are still in FOMO mode. They spent a little bit of time up here, brought in a little bit of volume, but I really think it was just a poke up to take out that 113 stops there. So I still think there's a decent chance the market will want to backfill these single prints to 52.67. However, if they find support there, that will be very bullish to see. So everyone that was short is being forced to cover. All right, well, now to the moon. So the main takeaways from this video should be the market will often open at a balance area high or a balance area low on the day of the FOMC. It will often go sideways in a tight range until 2 p.m. And then if you're going to take trades, which you probably shouldn't, but if you're going to take trades after 2 p.m. on an FOMC day, you need to get to break even on those trades very, very quickly. Do not let the market go against you and just stay in a losing trade during FOMC, because you can lose an insane amount insanely quickly. If you're going to gamble, at least gamble wisely. I hope you enjoyed this video as much as I enjoyed making it for you. Please give me a thumbs up. If you're new to the channel, hit the subscribe and notification bell. And as always, please say hello in the comments. I really do appreciate it when you guys say hi. Onward and upward, pirates. We'll see you on the next video.